Good morning, folks, and welcome to Swing Trading Today. This is Bob Desmond, and it is the 16th, the back half of January already. It's the 16th of January 2020. It is 5 a.m. Eastern Standard Time, and we are going to go over a couple of symbols that we want to take a look at. We spoke about them yesterday. One was Apple, the other one is Beyond Meat. We want to revisit them. Also, we're going to take a look at the pre-market futures action, but first we're going to go over a couple of headlines. One is really supportive of gold prices. It's indicative of what's concerning about what may be coming down the pike with regards to what the Germans say. Let's just bring it up here. What the Germans say is an effort to stem money laundering in Germany, but what appears to be the government tracking the wealth of citizens and their ownership of gold. And remember, there's precedent for the barring of consumers from owning gold going back to Franklin Delano Roosevelt and the Great Depression. So here we have the headline on Zero Hedge: we are being overrun. German government escalates its war on gold. So in essence, what they're doing is you have to register the amount of gold that you own, and the prior limit was $11,150 in US dollars, and it is now goes down to $2,230. So if you buy a necklace, it looks as though you have to buy you have to register with the government. So you have to wonder what the motivation is of the German government. They're saying that it's money laundering, but you know, when the government gets involved, it's pretty nefarious longer term. Good morning, Patrick. So just more indication that things are tightening up in the so-called Western democracies, and you can see these lines here. This one photo in particular. Here's a line outside of a gold and silver shop. And the deadline, I think, was the 31st of December to hoard up on gold and silver, because after the first of the year, you had to register again at those lower limits. And you can only imagine the bids that the markups these people had to pay for gold and silver. Another headline, and far too often, you're seeing the Turks, for whatever reason, their president, dictator, whatever he is, Erdogan, is a pretty aggressive fellow. And you've had Turkish jets violate Greek airspace a record 91 times in a single day. You need to remember that this is the same government that had allowed a record amount of migrants to flood into the EU. They have stemmed that somewhat, but he's always threatening to open those floodgates up yet again. He's threatening Libya. So it just seems as though there are war clouds that are just looming all around the globe, whether it be between the United States and Iran, the Turks in Syria, or the Turks in now Greece and the EU. They're an EU member, the Greeks, NATO member, and you have them over in Libya as well. So interesting times, and with interesting times brings volatility, and with volatility comes fear, and with fear comes opportunity. Let's go to the pre-market activity. I want to begin with the US dollar. Yesterday we had a very, very strong day in gold and silver and the miners. And part of that was due to a weaker US dollar, which broke daily support, and it is down slightly this morning. This is a 4-hour chart. Most of these will be 4-hour charts. Hey, Richard, good morning. Good morning to you. And we appear to be basing here somewhat. So let's keep an eye on this on the U.S. dollar, because right now gold is rallied up and into a resistance level, which did mark as prior support. And with options expiration, we may be kept in check here until tomorrow. We do have options that are expiring. We sold covered calls again. And we sold puts as well. Those should expire worthless. I was at $29.50 strike price on the NUGT. So the dollar holding support here. We'll keep an eye on it. If it breaks, in all probability, we're going to see a continuation move higher on gold, silver. Moving on to the 10-year Treasury note. This is behaving strong earlier. Now it's flat. Didn't follow through. All right, so what we're looking for here is a continuation move higher on the 10-year note, along with weakness in the U.S. dollar, and that should put a bid under gold and silver. This is a nice chart, because that weaker yield, if you have a rally in the 10-year bond or 10-year note, you're going to get weakness in yields, and that helps gold and silver. Moving on to gold. All right, gold is actually struggling a bit. We were up higher overnight. And when I say struggling, I mean on a very short-term basis, right? Not on a longer-term basis. The longer-term charts are setting up really nicely here. I'm talking about very short-term time frames. And we're always looking to build on our position in silver and the miners. And of course, gold prices play a part in that, with the miners in particular. And we gave up this support level here in red. We're going to turn this green because it was support. It is now going to act as a bit of resistance here. So we rallied through it here on the 14th. Now we have given it up. This was a closing bar below that support level. Let's do a deeper dive here. Now you can see they're struggling to try to recapture it on this 4-hour bar. We'll see what happens. All right. Moving on. Let's take a look at silver since I brought it up. That's the wrong. Silver's looking interesting. Let's turn this red. Okay, so similar in terms of price action as to what we saw on gold, except that it's behaving a bit stronger. We're down slightly. We came off the highs, but now we're beginning to press up higher. We're breaking out this 4-hour bar. Now, we don't know whether or not this will be successful until 9 a.m. when that 4-hour bar closes out. But we are in a nascent breakout on a 4-hour basis on silver. If you pull back, this is looking good. You're going to have a little bit of resistance up here at 1816. But once we break through that level, into our sights will be. I'll show you I'll show you the upper band of resistance in a moment. I just want to change this. All right, so here's price target number one at the, let's call it 1819 level, and if we close above that level, we'll come up here. What was a prior support level back here, we'll turn this yellow, will now become our upper band of resistance. So a rising price target to the upside, always nice. Hey Sam, yesterday Trump said he likes negative rates and the dollar is too strong. Yeah, you know, he keeps saying that. But for whatever reason, he still has Larry Kudlow as his economic advisor, and Larry Kudlow is a perennial, perpetual dollar bull. So I wonder sometimes about what he says and what he means. So I know I've heard him say that before. But if he wanted the dollar weaker, all he needs to do is to fire Larry Kudlow with a stroke of a pen, and the dollar would be weaker. Because if you go back, and I would have to look at the chart and do a timeline. If you took a look at the chart of gold or the dollar, you would see that when Larry Kudlow was brought on as the national economic advisor, gold took a dive. The dollar went up because of that. So maybe this is a temporary move higher, but it would certainly hit the markets and send a message that he wants a weaker U.S. dollar. I know what you're saying is accurate, but I wonder just how much he really means it and how much he's just trying to tease the market a little bit. So I take it with a grain of salt. And in terms of negative yields, you know, it hasn't worked for the Europeans. I'm not sure what value it brings. I really don't. Okay. And in fact, it's robbing a lot of his constituency, the senior citizens of the United States. He's robbing them. Fixed income people. Let's check out natural gas. Natural gas is not looking good on a macro basis. I just had to amend what I had to say. I was expecting to see a very weak chart. It's not that weak on a 4-hour basis, but when you take a look at nat gas, let's bring it up here. I was toying around with this last night because that's what I do. That's what I do in my free time. I look for opportunity. And where is it? I was looking at the monthly chart. I think it was UNG. Was it spot or UN? Yeah, it was the UNG. And you could see that on a monthly basis, we have a new yearly low. And we've created a new resistance level in 2020. So in November, we saw a bearish key reversal bar. Granted, yes, we had counter trend rallies in both November and December. And in fact, in January, where we traded UGAZ successfully twice. But nat gas is under a lot of pressure here. I mean, this is just ugly. So bearish key reversal bar November, bearish key reversal December, and so far beyond the halfway mark in January, we have a bearish key reversal bar and a continuation breakdown in 2020. So not a great way to start off the year. But if you want to look for bullish observations, we are putting in a possible, and I do mean a possible, double bottom setup on the stochastics. And we may get a back half or a mid-year rally on that gas. But right now, I'm not seeing any positive divergences whatsoever on nat gas. A very, very weak chart on a macro basis. Now, getting back to the 4-hour basis, it's not looking all that bad. So we may have a rally here that if we trade, we'll be trading the UGAZ again. We're just familiar with it, and plus it has more volatility. If you don't want the volatility, you want to buy nat gas, go with the UNG. Less volatility, but still very volatile. All right, so we're looking for a breakout above this upper band of resistance at the two spot, let's call it 2.14 mark on spot gas, nat gas. Richard, China's agriculture purchases are going to be market conditional. Is that the phrase that they used? Nice deal, yeah. Yeah, I'm wondering how they're going to reorder their supply chains. Pat, that's right, Pat. Thank you for that. Since we're on nat gas inventories reports, 10:30 a.m. Eastern Standard Time. Thanks, Pat. Let's go to oil. Oil's been consolidating. In fact, we're seeing perhaps opportunity here on oil. We were in a very tight wedge formation. Let's turn this red to highlight it. All right. So we broke out here in the after hours session last night. Pulled back, retested overnight. And you can see here that on RSI, we're putting in higher lows and higher highs. So we have a positive divergence in advance of a possible breakout to the upside on oil. So this is a potential trade here. And all you need to do is keep a stop right under these support levels. So it's a fairly safe risk-reward trade. New tariffs on European cars in France and Germany, UK. Don't say Iran is the bad guy. You talking about U.S. tariffs on those products? And you speak. Sam's over in Italy for those, so he's speaking from the European perspective. You guys have tariffs on us for years. We just don't talk about it. What else do we have here? Let's take a look at Bitcoin, which has been moving up higher. It's a good week. And we called this breakout. Those are my developers. Hopefully they're working on getting my SMS system up and working. Okay, I'll deal with them in a minute. Okay, so let's go to the weekly chart here. So here's your breakout. We were talking about this for a while. We set up 2 resistance levels. Here's 1. We cleared it. Here's 2. We cleared it. Bitcoin is setting up very, very nicely. Very, very nicely. Back to the 4-hour chart. It appears to be basing here. Creating a little bit of a trading channel. Nice consolidation. RSI not going the direction that you'd like it to. Lower highs, lower lows. So I don't see a rush to go, excuse me, to go rushing into. I'm reading Sam's comments back. I don't see a rush. I don't see the need to go rushing into Bitcoin just yet. Nice consolidation though. Gotcha. Are you shorting the European car makers? I think that VW may be buying out. Good morning, RL. I think VW may be buying out Ford. There's rumor out there of that. Let's go to the stock market futures, and we'll leave off with that. And we'll take a quick look at Beyond Meat and Apple as well. Look at the Russell this morning, huh? Ripping. All right, so we broke out the other day, and I was tempted to buy it. I even said it. We broke out, pulled back, retested. I didn't want to buy it. Damn. Okay. And we are flashing a continuation breakout here on the Russell 2000. This was predicted. Looking good. The NASDAQ. Wow, they're priming it up again. We have broken out on a 4-hour basis. Nice breakout here. Broke out this last 4-hour bar. We're doing the retest now, the breakout point. Exactly what you want to see. Let's take a look at the S&P. And as I mentioned with silver earlier, let's go back to that. You have a rising upper band of resistance. We'll come back to the S&P. Remember this line here. Let's turn this yellow to give it a visual. All right, so what was a prior support level is now acting as resistance, but a rising upper band of resistance. And if you take a look at, that's the wrong chart again, and here's the same deal. Here's what I'm expecting for silver. What was a prior lower band of support will now act as an upper band of resistance for silver back to S&P 500. So this chart is looking good as well. We have a breakout on RSI. That was concerning. We had a negative divergence going on there. It appears to be resolving at current. Let's go to the, let's bring up Beyond Meat in the pre-market, see if it's trading at all. Nah. It's down on very thin volume. Now, we spoke about Beyond Meat for the past couple of days, and I've been watching it as a barometer. This is what I was telling my son yesterday. We're watching it as a barometer of insanity. And just because we're rallying this morning doesn't necessarily mean that we should be rallying. You're seeing a lot of junk stocks that are rallying, and the S&P, the Russell 2000 rallying is indicative of a late stage blow off, and it could last for a while longer. So we were talking about Beyond Meat here. We projected that we would see a rally up to the 130s. And again, I said this yesterday, I'll repeat it. I didn't predict that we would go to the 130s the same day that we spoke about it. Yesterday, we dropped down, pulled back. I was anticipating and honestly hoping for a rally, a limp back up intraday and a lower high from which to short at, just shy of that prior high at the 135 mark. But we didn't get it. So too much risk to go shorting Beyond Meat. Now, our Edge, which was a very, very overbought condition, has since been resolved. Right, so we rallied up into resistance. We were overbought with RSI above 80. And I think that we could probably head a lot higher on RSI. I wasn't too enamored with the RSI. You can easily see RSI 90 on these stocks. Now, with regard to Apple, a mega cap stock, in fact, let's bring up our annotated version, which we've also been tracking, but I haven't been willing to short it yet. Here's the daily chart. And even though we pulled back yesterday, still not willing to short it. Because the edge, our edge on a daily basis, has been eliminated. We were seeing RSI, or had seen RSI at about 86. That froth has come off. So we could see a consolidation, another move back up higher. As long as it keeps spiking the markets higher, they need Apple. You got to have Apple. You got to have Google. But the macro play here, and I'm going to leave off with this, the macro play is not the daily chart. We need to get away from the daily charts. The only time we want to start using the daily charts for Apple right now is as a timing tool. The 4-hour chart, the daily chart. We're not day traders here. We're looking for a multi-day to multi-week trade. And when you take a look at the weekly chart, which is what you need to take a look at for those types of trades, you have RSI at 89.14. That's insanity. It can stay insane. And the price action that we're beginning to see right now is indicative of a chart that maybe, we have 2 trading days left to go. So I'm using the word maybe setting up for a bit of topping action, profit taking. It's too early in the week to make a determination as to whether or not volume is good or bad. 2 trading days left to go. MACD histogram is flattening out. So this is setting up as an interesting short. And going back in time, let's get rid of Stokes here. And I'll show you what we're looking for. All right, so simply using RSI, excuse me, simply using RSI, we're looking for a resolution of this overbought condition. So going back in time, how is this resolved back here? It simply stopped going up, right? It just stalled out and eventually broke. Not much in terms of topping action. I mean, the peak here in May of 2017 was a good week. You would think that you would have seen a continuation move higher the next week. It should have, but it didn't. That's a signal by the market. It had every reason. It wasn't necessarily extremely overbought, but it couldn't press up higher. And volume was good. So you didn't get much of an indication by the market until the following week when it failed to press higher. And RSI started coming off. You started seeing lower highs. So people, when they say simply go shorting a stock, an ETF, an ETN, whatever, cupcakes. I don't care if you're charting cupcakes. If you're simply shorting a stock based upon RSI being over 80, 90, whatever, you're going to lose money, right? Because they could stay overbought, especially if you're on margin. So just keep this in mind. You want to see lower highs. You want to see the froth coming off of Apple, and you're already beginning to see it on a daily basis. Watch for higher highs, yet RSI failing to confirm those higher highs. And then you start getting your clues by the market that, okay, you know what? We have some stealth distribution going on here of Apple. Perhaps it's time to begin leaning into the short side before the markets take notice of the distribution. And we're seeing 2 days of back-to-back distribution bars on Apple. That doesn't mean it's all over and done yet. But if we begin to see moves higher and then bearish reversal bars or hollow-filled candlesticks, then you get interested to the short side. But right now, caution. Strong stocks tend to get stronger until they don't. All right, so no rush to get short of Apple just yet, despite all the reasons that I just cited. But members will be in contact. We'll talk strategy. And that is it for this morning, folks. Everybody have a great trading day. Please hit that like button if you could, and have a profitable trading day, and be well.